But despite the rough start to August on Wall Street, healthcare stocks were in good shape today. The S&P sector ETF closing 1% higher. Eli Lilly leading the group up 3.5% after a study showed its weight loss drug Zepbound can slash heart failure risks, including hospitalization and death, by 38%. This coming as CEO David Rick says the drug could officially come out of shortage as early as today or tomorrow. But are Lilly and its peers immune to macro fears rattling the broader market? Let's bring in Mizuho healthcare sector strategist Jared Holz. Jared, great to have you with us. Let's first talk about this study. It was phase 3 in heart failure specifically. How does this differ from Novo's SELECT data, which is also in heart conditions, which prevented things like heart attacks?
Right. It's slightly different. I mean, they were looking for an indication that is not exactly what Novo had in terms of cardiovascular risk and stroke. This is particularly a heart failure indication. I mean, it's similar in context in that it improves or expands the market. We already know how powerful the drug is. Now we're looking for increased reimbursement, increased access to patients that have these underlying conditions where it's much easier to write the script for. So big positive.
So basically it expands the total addressable market because you can write a prescription for a broader range of heart conditions.
Exactly. I think that's what we saw with the SELECT data. That's why it was so profound. You've seen a lot of the patients, at least anecdotally via these surveys that are done and other methodologies that the companies use. A lot of the people that are on these drugs are not using them for obesity. They're actually using them for cardiometabolic improvement, stroke reduction, et cetera. So I think this is another step in the right direction.
So now that we're seeing some more supply being able to come on the market and more demand, do you think, though, that pricing will move down at all?
It's got to move down in time. That's been the big risk for this trade, in my view, the entire time, is that we've got to a point where these drugs are massive. You've got insurance companies that are going to push back at some point. Once the access is kind of reached an equilibrium, which it sounds like it's going to at some point pretty soon with supply demand, I would expect it to come down. We also have the IRA that's going to hit these drugs in like 3 years roughly, plus competition. You have all these factors. That's what I think is really putting the pressure on these stocks as much as the overall market.
So, Jared, we've been talking about a weakened consumer across a lot of different industries. What percentage of the scripts are covered by insurance? And I'm just curious if this is something, if we get in a more difficult, environment economically, is it going to be downward pressure on demand for these drugs?
Yeah, it's a great question. We don't know for sure. Some of the work that we've done suggests roughly 50-50. So 50% of patients are going to a doctor, getting the prescription for, a certain reason. 50% are paying out of pocket. So agree. I think if there is stress on the consumer, which it seems like there is vis-a-vis all these other earnings prints we've seen across industry groups, I think this will be hit. The one thing I would kind of consider is it's not that expensive if you really consider it for a 3-month period, a 6-month period. You're not talking about that much out of pocket if patients are not using it for more than a couple years.
Jared, Tuesday, Merck reports quarter was fine. Full year guidance scared people. The stock acted in kind. It's a name you loved correctly in the fall of last year. I think it's a little overdone here. I think the Keytruda numbers were fine. Karen mentioned Gardasil. We'll see. Thoughts on Merck here at 113?
Yeah, I think it's a buy here. Not a great quarter, but I don't think anyone was really pushing it on Gardasil anyway. That was not the core to, the thesis around the street. So I think you got a pretty good opportunity. Keytruda crushing it. They'll do other deals. They're not going to stand still while the business erodes. We have time until that IO franchise declines anyway. So I like it here. Gardasil, a big deal, but shouldn't have it down this much.
They specifically said they want to acquire an obesity drug and a next generation obesity drug. So immediately, who do you think of?
I kind of think of Corbus. I kind of think of Viking a little bit. It's really tough to say what is kind of like second generation, third generation, or differentiated. We don't really know what any of those things mean. I kind of think that within the confines of the publicly traded names, Corbus, Viking, maybe Wave makes sense, but it's so hard to know.